Hi, today is Sunday, the 10th of January, at the end of the first week of trading for 2021, and the week started on, as you can see here, profit taking on the very first day, and it tested the pivot level, this yellow line here, 36.70, and then from then on, once the Georgia runoff elections were over and done with, and after the crazy events on Wednesday, the market started grinding up and it ended the week on 38.25, I think. And on this CFD, which closes a few minutes later because it aligns to the futures, it actually ground a little higher to 38.31. So all we can say is that unless there are more surprises, the next 2 weeks we should have the market grinding up again. We now have a strong resistance on 39.08. Pivot is now 37.50. So I would assume the market would hover, will try and aim higher, but at least hover around above 37.50, which is now acting as a support. If you see this fibs here, we have a first fib on 37.68, then 37.50, 7.30. And on Friday, we had just a little bit of a pickup where the market tried to test the resilience level here on 37.90. So it may test it again. I would say the market will, whether it makes any sense or not, the market will still try and aim higher in the next week. If we look at the daily chart, we're still very much on a bull momentum, even though the strong resistance here is still 37.50. So we can't discard a scenario whereby this would be a short-lived excursion. So we may need to see the market testing 37.50 for support before it can go up. I wouldn't be surprised if there are quite a lot of hesitation in this fairly large range, 37.50 to all-time highs or higher. Of course, this market is quite irrational and there will be some correction at some point. We don't have much of an evidence right now. The fixed term structure is flattish, turning back to some form of contango, at least in the short term. So there should not be much surprises in the next 2 weeks. However, we can expect maybe early Feb, some deeper profit taking, and we would maybe on this time frame look at this type of fib, and here we would probably see the first fib is actually on 36.04. The resilience level is the level we tested last week on Monday, so it's about 3700. I wouldn't be any concern if the market drops to 3700. It's still on this time frame the test level for resilience. These levels from 3670 to 3700 should be fairly strong, at least in the next few days or week. That being said, we can't discard further down the line a deeper retracement to 3600. Right, now let's look at Monday for the short-term outlook. And of course, I invite you to join the Slack group for more frequent updates. Here we see the market is still quite bullish, and I would not be surprised if the market aims for the stall level here, which is 38.66, 37. That being said, I think some test of the bullish resilience would make sense. Anyway, January will be expiring, and I think the February dynamics, which with a higher volatility, will come into play. Maybe not next week, but the week after. Thank you for watching, and see you tomorrow on Slack for those who follow more regular updates on this SPX outlook and the current trades. Bye for now.